what are the things, the habits that keep people poor?
Wow. Well, the first one really has to do with understanding money, because unless you understand what money is, none of the other habits really matter, because at its core, what is money? And when you ask people that, you might say it was a $100 bill, a $50 bill, that's what money is. But what is that money? Because that money that we have today is different than what money was 60 years ago. The money that we call money today is currency. It's really just pieces of paper. And when you understand that, it's going to change what you do with the money. And the reason why I'm saying that is because my family's from India, a state in India called Punjab. And over there, it's a very traditional thing that when you earn this paper dollars, many people will convert this cash into gold because they understand that these paper dollars lose value and it's just paper. So they want to convert it to something real, something tangible, so they will go out and buy gold with it.
All right, really fast, explain to people why paper money loses value over time.
So our paper dollars can be manipulated and controlled by other entities such as the Federal Reserve Bank and the government. Now, the interesting thing about the Federal Reserve Bank is it's called the Federal Reserve Bank. However, it's not federal. It says so on their website. They're not a reserve. They don't keep cash reserves anywhere. They're not a bank. You and I can't go there to deposit money. So what happens is...
Should I hear wolves howling in the background? Like, is there something sinister going on, do you think, for real? Or is it just the system and it's just how it works?
Well, it depends. If you understand the system, you can use it to your advantage. If you don't understand the system, it is going to screw you over many, many, many times.
Yeah, this is my obsession. So as you and I were talking about before we started rolling camera, 2 years ago, I considered myself very good at making money, very bad at investing money.
Right.
And then the pandemic hit and I really started to panic for other people that, look, I'm going to make it out of the pandemic fine, but I don't know that that will be true for people that don't understand money.
Right.
And so getting educated, like for me to try to help other people, I've had to educate myself about what money is.
Right.
Getting freaked out by inflation, and I've heard you talk about this, so I know you know this well, but that the government, when you say manipulate the money, they literally just make more of it.
Right.
Magically.
And literally. And this is where the rich will become richer, the poor will become poorer, and the middle class will get wiped out. And the reason why is because some people, rich people, will understand money and they will continue teaching their kids. And everybody else, the majority of people who have no idea what's happening, will continue to become poorer because they don't even see it happening. And so what happens is, so you have the government and the Fed. The government spends money. Now, where do they get their money? Well, they get their money from taxpayers, people like you, me, people watching this video, through tax dollars. Now,
can we hammer that for a second?
Sure.
The government does not make money. The government takes money from people who are making money.
Right.
Now, that's not necessarily bad because they provide a lot of amazing things, but they're not necessarily efficient with their dollars.
So, yeah, so we can dive into that for a second. So, you have to understand what someone's role is. If you are a company, right, you have a company, your job is to make a profit, because if you don't have a profit, you're not going to be in business unless you have some other stream of, venture capital debt or something. But if you don't have a profit, you can't continue operating. And so your job is to be as efficient as possible as a company. The government can actually be benefited by being inefficient, because what is the government's job? You have to understand what is their role. If their goal is to create jobs, well, then you can be as inefficient as you want and you can achieve that goal. Because if I'm the government, I just want to create as many jobs as possible, I can pay people to pick up this mug and put it from the left hand to right hand. I just created a job. You're employed, you have an income, but you're not producing anything of value. And this is where you have to understand, okay, what is that purpose? And so now, if we get away from the politics for a second, the government now spends money. They get money from taxpayers because the government is not a for-profit entity. They don't create a product and sell it or create something and sell it for a profit. Instead, people make money and then the government taxes your income. Now, just like anybody else, there's checks and balances. If the government has $1 million, they can only spend $1 million, you would think. But that's not how it works. So the government has $1 million, and what's happening now is they're going to spend significantly more than $1 million. Now, if you have a certain amount of income and you spend more than that, what do? Well, you're going to have to subsidize or find that extra cash somewhere. And in the government's case, what they can do is they can go out and look for a loan. It's called a treasury bond. For as long as anyone can remember, have been considered the safest investment anybody can make. Well, what it is you're literally loaning money to the government. But what happens now if there's not enough people out there to loan money to the government. If the government wants trillions and trillions of dollars, if there's not enough people out there to loan that money to the government and they keep wanting to spend more money, you still got to make up this cost. So what do? They call up their friends at the Federal Reserve Bank and they say, hey, we need a $2 trillion loan. And then the Fed's going to say, okay, we got you. Now remember what I said, they're not a reserve. They don't have a cash pile anywhere. So what do? They go to the money printer, boop, 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 and now they can print out $2 trillion. They loan this cash to the government, and now the government got their $2 trillion. The Federal Reserve printed it out of nothing. The government can now take this $2 trillion and spend it in whatever way that they want. It can be inefficient. They can try to create efficient products, but their goal is to hopefully help people. Now, whether they're inefficient or not is a political debate. However, that is what they do. Now,
really fast before we move on. So this is the part that people need to understand about why the rich get richer. Because I'm as a rich guy, I'm like, oh, I'm going to get richer? Like what? Great.
So what happens
But I
then?
never understood how.
So now what happens? You just printed this money, right? And then
Which you don't actually print, by the way. You just increase a database somewhere.
It's a bunch of digits.
Yep.
And now this money enters our economic circulation. Well, what happens now when more dollars enter without actual wealth being created? Because we saw this happen in textbook form in 2020 and 2021, where nothing was being produced except money. Well, when more money gets produced, it effectively reduces the value of each individual dollar. This is what inflation is. The word inflation comes from the word inflate. What are you inflating? The monetary supply. So you're increasing the monetary supply, causing the value of each individual dollar to go down, which effectively causes the price of things to go up. And so in 2020, 2021, no one's producing. However, the government is spending money like crazy. Where are they getting this money? The Fed. So the Fed's printing money, giving it to the government's spending it like crazy. Now people are getting money. It's people, it's businesses, it's corporations, and this money is being spent. And now everybody is like, wow, I'm sitting at home and I'm rich. You have some people who are getting big unemployment checks. You have some businesses getting millions of dollars, and everything is running smooth. And people are spending money like crazy, buying things, but nothing is being produced. So then what happens? Well, now you have a supply chain mess because everyone's buying all the stuff in stores. However, no business is able to produce anything because the economy shut down. So the supply chain issue then you start to see is a byproduct of the inflation because everyone's trying to blame, oh, the inflation is happening because of supply chain issues. But you have to look at what is the real root cause. The inflation is what causes the supply chain issues. And now we're trying to go backwards. But this is where rich get rich and the poor get poorer, because as the value of the dollars drop, what happens? For regular people, your salary doesn't stretch as far. Your savings don't buy you as much. And so you're effectively becoming poorer each and every day because for most of us, we're taught to save our money. That's what I was told to do growing up. That traditional Indian house is save, save, save. And so I was told to save my money, and your savings are becoming less valuable each and every day. Well, what wealthy people do is they're not storing cash, they're buying assets. And so when we have this sort of economic system.
Can you explain what an asset is?
An asset.
We're now getting to the root of how the rich actually get richer.
Right.
This was the part it took me a very long time to understand. But now that I get it, one, it doesn't need to be the rich that are getting richer. Anybody can own assets.
Yeah.
But they have to understand what assets are and then actually buy said assets.
Right.
Because this is how the government pumps the money into the system. And this was the part, like, I'm grateful sometimes that I'm kind of dumb, for real. But and this really, I had a breakthrough moment back at Quest. We were dealing with nutritional science and I didn't always understand it. And so I would have to keep asking. But what I found was if I just totally got rid of my embarrassment over not knowing, and I kept asking until I understood it so well that I could explain it to other people, that ended up propelling me forward because I was no longer just nodding and smiling and going along. I was like, no, I don't get that. I don't understand. And so by pushing into that, then I actually began to understand the biology. I began to understand what ingredients made sense and all of that.
Right.
So, but I had to be willing to look stupid.
Yeah.
And so now, because I've been willing to look stupid for so long in the world of finance, I finally asked the magic question, which is when people, because I actually thought they were printing money. I thought that $100 bills were coming off of a printing machine. That's not how it's done, at least not to the vast majority of it. It's zeros and ones in a database. And when they create that money, I was like, whose database entry is it? Like, are they actually going into rich people's accounts and giving them money? No. What they do is they buy oftentimes government assets. I don't want to introduce the word bonds and stuff.
Sure.
But like they're buying assets from the government.
Right.
But the question is, where did those assets get purchased in the first place? And they got purchased by people who are effectively trying to park their money, as they call it.
Yeah.
So I, for years, was parking my money in government bonds because the government guarantees it.
Yeah.
And so the way that the government raises money without having to raise your tax is they put bonds out into the world that then people buy. So when they're pumping money into the system, they just go buy those bonds. So now they're buying them from rich people because rich people were the ones that were educated enough and had the capital to buy said bonds.
It's actually a little bit deeper because in the pandemic, we saw something that we've never seen happen before. So the Fed has the ability to work with interest rates. I'll talk about that in just a second. And then they can print money and give it to the government. And then when you have an emergency time, we saw this happen in 2008, we saw it happen in 2020, they can do weird things. So what they did in 2020, this is the first time it's ever happened in history, is they directly gave money to corporations in the form of purchasing corporate bond ETFs. So think of it this way. The biggest corporations in America can go out and raise money from a bank. They can go out and raise investment dollars, or they can put out this loan, say, if you are a regular person, you want to loan money to us, you can do that. And so there's ETFs, which is a group of corporations that are looking to raise money. And it's a way to kind of track those debt investments. Well, in 2020, because a lot of corporations had no cash, and now all of a sudden they're like, oh, we can't sell products, we're going to go under. The Fed did something that has never been done, and they started buying corporate bond ETFs in the first time in history. And this is where things got really dicey, because now how do you decide who gets that money or not? I mean, they're printing money. Somebody's got to pay for that. Who's paying for it? Regular people, average people, because now it's a hidden tax. Because the government can't just spend money without somebody paying for it. They have to generate the tax dollars. If they don't pay it through tax dollars, somebody's still going to have to pay a tax. And inflation now is a hidden tax. It's a silent tax. It affects the people who don't understand money, and it disproportionately affects the poor and the financially uneducated. And this is why financial education is so important, is because if you don't understand this, you are going to get screwed over by the system. Because now, guess what? Your gas is going to be more expensive. Your groceries are going to be more expensive. Your home cost is going to be more expensive. The cost to do anything is going to cost you so much more today, next year, the year after that. While your salary, hey, you got a raise, but you're actually broker now than you were before the raise because your raise isn't keeping up with inflation. And so what's happening now, this money gets printed and it enters our economic circulation, and now you can own the assets. Or what happens is, let's say you own stocks, you own real estate. Well, the Fed can also manipulate interest rates. So when interest rates go down, it makes borrowing money cheaper. Well, when you make borrowing money cheaper, more people and institutions are going to go out and borrow money. This also creates more inflation, because now when you go to the bank and you borrow $1 million or $100,000, the bank is going to work with the Fed to print this money, and that's how it gets injected into the economy. So lower interest rates create more inflation. And if you are somebody who's financially educated, you own assets. And we didn't explicitly answer what is an asset. It is something that gives you equity. And at the broadest form, an asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. What's an example of an asset? This could be owning a business, investing in stocks, investing in real estate, anything that you buy for the purpose of making money, right? And so when interest rates go down, because now the Fed working with the government want to create more inflation, more dollars are going to enter economic circulation. More people are going to want to buy a home. Well, if you have more demand to buy a home, where do home prices go? Up. Who owns homes? Well, yeah, if you're a homeowner, but if you are a real estate investor, now the value of your assets have just, because now you own multiple real estate investments. Your rents have gone up. Your stock investments have gone up, because now businesses can borrow money for effectively nothing. You borrow money for 3, 4, 5%, and now you can borrow hundreds of millions of dollars to grow the company. And if you can grow your company by 6%, well, you just made a profit off of the free debt. And so now corporations become wealthier because of it. Asset prices go up. And what does this do? The reason why it makes rich people richer and poor people poorer is because not only is your cost of living higher, but now if you want to go and invest your money, well, asset prices are more difficult to attain. It's harder to buy the same level of stocks. It's harder to buy the same level of real estate because now the people who own these have already seen that appreciation. And now if you're wealthy and you understand this and you're buying these assets and you've been buying them, now you're seeing the real gains and you start to see this divide between the rich and the poor. And this is where inflation disproportionately hurts the financially uneducated and the poor, and disproportionately benefits the wealthy, and that's why the middle class gets wiped out. And the crazy thing is none of us are taught this. I didn't grow up learning about money. I didn't grow up learning about financial education. I didn't grow up learning about investing. I didn't grow up learning about any sort of wealth. My parents are immigrants from a state in India called Punjab, like I was saying before. And in my household, success meant go to school, get good grades, get a good job. And for me, that good job was I had to become a doctor. I was actually given two options: become a doctor, become a failure. I could choose.
They let you choose.
They let me choose, right? And so I saw how hard they worked. For my dad, if he had a Saturday and a Sunday off, that was considered a long weekend. And so, I wanted to give back to my parents. I knew I wanted to become successful. They wanted me to become successful. And so I kind of followed that path, like doing what everybody says, following the system, trusting the system, right? And it just didn't make sense to me because on one hand, in my house, money was a taboo topic. You don't talk about money. You don't worry about money. It's a bad thing. But at the same time, I see how hard my parents are working to get paid, to pay for our lives. Now, we were fortunate. I never had to worry about my next meal. We were never poor or anything like that. But I saw how hard they worked. And it wasn't until I got to college until I realized something isn't adding up, because I was actually studying to become a doctor. I was taking the medical college admission test, the MCAT. And as I'm studying for this test, I started doing a couple things. First, I started reading business books because I was just interested by this. That was the first. English is my second language, so I never grew up reading books in my grade school years. Even English class, I almost failed my English class in I think it was middle school because I just didn't understand how to write papers or do all that. But as soon as I started reading business books, I started reading them for fun because I was interested by it. And then I started going on to Google and I started researching just random things, from things like the richest people in America. And you see like Warren Buffett, Steve Jobs, Mark Zuckerberg. I don't even know, he was on it back then. But you had a bunch of people who none of them were doctors. None of them went down that traditional path. And I was like, wait, I thought that grades correlated linearly with income. Like if I got better grades, my income would directly correlate with that. So that was like my first wait, is something wrong here? Was something it just wasn't adding up.
Let's assume that you can invest $1,000 a month into SPYD. Now, let's take a look at what the numbers will look like. Over the course of your investing career, you invested $540,000 into SPYD. And now when it comes time for you to retire, you are making